How do you create yield with XRP? As far as the returns that we pay people today, the way that that's structured, we've mitigated all counterparty risk and we've mitigated all volatility risk. There is still risk in the investment itself. The strategies that we run could lose money over a quarter, and we would have to sell a small amount of XRP to be able to cover those losses if that had taken place. It did take place the first quarter for the growth fund, but then the next month we made 5% and bought more than we had sold. So I'm trying not to make any representations of anything that aren't correct here. What we do is we aggregate the asset. You sign a subscription agreement to the hedge fund. We pool that. It stays in institutional custody. That value is then reflected off of the institutional custody account onto the counterparty exchange. So if the exchange went bankrupt or our partners have problems or whatever happens, the assets are still on our side in the account. So we mitigated counterparty risk. Now, the way we mitigate volatility risk is that reflected value, we draw a line of margin against it, and we only ever trade 40, 50% of that line of margin. So if there is volatility in the market like there was on 1010, they get out of positions and there's no capital called away. And that worked perfectly. We had no XRP called away on 1010, which was the largest liquidation that's ever happened in crypto, 9 times larger than Luna. So I was extremely happy. Like everything that we put in place worked perfectly. We actually made money in the